This was the moment exactly a year ago that a reality TV star was elected the 45th President of the United States. During his campaign, he was full of promises.
We are going to build a great border wall.
NAFTA is the worst trade deal maybe ever signed anywhere.
We're going to keep America out of Trans-Pacific Partnership.
We will be able to immediately repeal and replace Obamacare.
But 1 year on, has he delivered? The Mexico Wall has been commissioned. Towering steel and concrete prototypes are up, but it's far from being built. On NAFTA, no headway has been made in the negotiations. More talks are planned for this month.
The first one is a withdrawal of the United States from the Trans-Pacific Partnership.
The Trans-Pacific Partnership, meanwhile, was scrapped days after Trump became president. And Obamacare is nowhere near being repealed or replaced. His old nemesis, John McCain, had this to say.
I will not vote for this bill as it is today.
But since he's been in office, the stock market has hit record levels. The S&P 500 is up over 20% since November last year. Unemployment is at 4.1%, that's the lowest in 17 years. And the economy has averaged 3% growth in the past 3 quarters. But 1 year on, Americans give Trump little credit for the state of the economy. Only 44% say he's doing a good job, while 53% say he's not done well. And something else that isn't happy with Trump is the dollar. It's down due to worries over possible delays to the president's tax reform plan. Clearly, Trump has a lot of work to do. There are 1,100 days until the next election, and a majority of Americans seem to be counting them down. Maria Ramos, TRT World.
And joining me from New York City is David Levine. He's the founder of investment firm Odin River. David, welcome to Money Talks. So it's been a year since the election. The stocks are up 21%. How much further do you see this rally going?
Well, thanks for having me. And, you know, it's a tough question. The good thing that we know is that the economy's been doing well. As you mentioned, stocks are up and confidence is up. And so, you know, I'd say that the first 12 months of the administration have definitely been good for the financial markets. We'll see from here.
Right.
There's a lot of uncertainty.
Right, so there is indeed. Much of the rally, though, has been because of the enormous amount of liquidity, of course, that are still in the markets as a result of QE and interest rate cuts. But it's also been predicated on the hopes of tax reforms. What happens to stock prices if he fails to push through those crucial tax reforms?
Well, I think the first part of your statement is probably the key. I mean, if you look at the lack of action, meaning the lack of big regulatory milestones in the first 12 months, I think that helps to explain that actually the liquidity, the broader economic backdrop, quantitative easing, monetary policy, these are very big actions that have a long-lasting impact. And so given that the markets have already been strong and there has been little action, it's hard to say if, you know, a lack of tax reform will actually slow them down. You know, they've already actually been pretty patient about the lack of tax reform to date.
David, looking ahead, what do you see are the main challenges over the coming year for Donald Trump? Are they mostly domestic? The tax reform agenda we've talked about, the Russia probe, for example, midterm elections coming up about this time next year, or are they likely to be external, things like foreign policy issues, North Korea, Iran, or trade relations? Where do you see the challenges coming for him?
You know, so the political environment has been pretty dynamic, as you know, maybe that's an understatement. I'd say political risk and change has been heightened, and you know, the president himself is an agent of change. As a result, getting things done has been hard. There's been some elections here domestically in the last 24 hours, which show momentum in the Democratic Party. So it's likely going to be that midterm elections will continue to show some challenges. Getting things done domestically should continue to be a challenge given the increasing deadlock that will result from that. But to your point, the international, you know, I'll call it the political climate and just the international arena is highly uncertain. If anything, that uncertainty has been increasing, what with the recent actions in Saudi Arabia. There's really no change the situation in North Korea. So I'd say domestically, there's really deadlock. Fortunately, the economy is doing fine, but politically, if anything, the deadlock should increase. Internationally, I think there's really quite a bit of political risk on the horizon. We've pointed just to a couple in this conversation, but as you know, there's a lot more uncertainty beyond those topics. So probably the most uncertainty will be in the political arena internationally, and then deadlock domestically.
David, so looking at it from an investor's point of view, how do you play the Trump equation going forwards? Where do you sit right now? Are you long on stocks? Are you short on stocks and long on debt?
Yeah, so I'm pretty cautious given the financial markets valuations. You mentioned earlier on your program the IPO action in the Chinese markets. We see what's happening in cryptocurrencies and other places, and so valuations are at pretty extreme levels, whether it's across equities, actually credit markets as well. And that's in a backdrop where political risk is very high. So in the near term, I'm actually quite cautious, both equities and credit. It's unfortunately near term a pretty pessimistic story. Now, on the upside, the long term is very optimistic. The other thing you mentioned earlier on your program was the future of energy. Great things are happening. You mentioned the meeting with Mr. Musk and the president in Turkey. These are long-term trends that will continue. So I'm very long-term optimistic about things like advanced energy, about things like advanced technologies. I think that social media and the like and other kind of technologies will continue to thrive. But in the immediate term, the markets are very pricey, and so I'm quite cautious.
Great. Thank you for your analysis, David Levine of Odin River in New York City.